Ladies and gentlemen, welcome to today's in-depth analysis of the U.S. economy under President Donald Trump. We'll explore the multifaceted impacts of his policies, from trade wars and tax reforms to employment trends and fiscal deficits. Join us as we dissect the question, is Donald Trump tanking the U.S. economy? And let's not forget Trump's relationship with the Federal Reserve, because nothing says economic stability like the President of the United States treating the Fed chair like a contestant on The Apprentice. Whenever interest rates didn't align with his economic fantasy, he'd go on a Twitter rampage, demanding they be slashed to zero. Imagine your landlord lowering your rent every time you complained loudly enough. Sounds great, but eventually, the whole building collapses. Trump thought keeping interest rates low would fuel growth forever, ignoring the small detail that printing money like it's monopoly cash can lead to inflation. It's like feeding a toddler candy to keep them happy. Sure, they are smiling now, but soon enough, they'll be bouncing off the walls and then crashing hard. Then there was his brilliant idea of handling the pandemic. When COVID-19 hit, Trump treated the economy like it was a reality TV show cliffhanger, downplaying the crisis while hoping the the stock market, would stay up. Businesses shut down, millions lost their jobs. And instead of addressing the issue, he suggested injecting disinfectant. Meanwhile, stimulus checks were sent out in a way that made lottery winnings seem more predictable. Some people got help, others got nothing, and massive corporations walked away with billions while every day Americans were left wondering if they could pay rent. It was the economic equivalent of a fire. Departments saving the mansions first and letting the apartment buildings burn. And let's talk about the national debt. Trump came into office promising to eliminate it like a late-night infomercial salesman guaranteeing six-pack abs in 2 weeks. Instead, he increased it by nearly $8 trillion. That's trillion with a T. At this point, the U.S. government isn't just borrowing money. It's basically financing itself the way a college student lives off credit cards and ramen noodles. Trump's solution: keep spending, cut taxes even further, and hope the next president deals with it. If the economy were a game of Jenga, Trump kept pulling out blocks while yelling, "Best Jenga player ever," right before the whole tower collapsed. And through it all, Trump remained convinced that he alone could fix everything. The economy wasn't crumbling, it was just experiencing tremendous success, according to him. If the stock market tanked, it was someone else's fault. If it went up, it was all because of him. And when the economy eventually cracked under the weight of reckless policies, trade wars, and a global crisis, he simply shrugged, blamed the media, and moved on, because in Trump's world, as long as his name was on the headlines, the economy was the greatest in history. Donald Trump once called himself a stable genius, but if the economy could talk, it might beg to differ. His trade wars were supposed to bring back American manufacturing, but instead, they made basic goods more expensive and sent businesses scrambling to adjust. Imagine going to a diner, ordering a burger, and finding out that tariffs on beef, cheese, and the plate itself have turned your $10 meal into a $25 luxury. Farmers who were supposed to be winning under Trump ended up needing billions in government bailouts just to stay afloat, making capitalism look suspiciously like socialism. And let's not forget Wall Street. One day it was hitting record highs. The next it was crashing like a teenager learning to drive stick shift. Then came the Tax Cuts and Jobs Act of 2017, Trump's signature economic move, which he promised would pay for itself. It didn't. Instead, it blew a massive hole in the federal budget, ballooning the national debt faster than a contestant at a hot dog eating contest. Corporations got massive tax breaks, and in return, they generously rewarded America by buying back their own stocks instead of hiring more workers. Meanwhile, the average American got a tax cut that was about enough to cover one extra trip to Starbucks per month. But don't worry, those cuts for the rich were permanent, while the middle class got a temporary discount, kind of like a store, saying, "Hey, here's a coupon that expires next Tuesday, but billionaires shop free forever." And let's talk about Trump's obsession with the stock market. To him, the Dow Jones was basically a mood ring. If it was up, he was the greatest president ever. If it was down, it was fake news. He tweeted about the market so much, you'd think he was a financial influencer. instead of the leader of the free world. But the reality? The economy was propped up on a sugar rush of tax cuts, cheap money, and record government spending. And just like a kid after too much candy, it eventually crashed hard. Businesses hesitated to invest because trade policies changed with every tweet, and economic confidence took a hit that even the best spin doctors couldn't fix. Of course, Trump had his loyal defenders, claiming he was a business genius who knew how to run America like a company. The problem? His own businesses had filed for bankruptcy 6 times. Running a country like a Trump casino was never going to end well, unless you think the best economic strategy is to let the House win and the customers lose. By the time his term ended, unemployment had skyrocketed, the deficit had hit record highs, and economic uncertainty was at an all-time peak. But hey, at least we got some fantastic Trump-branded economic slogans out of it, because if there's one thing he knows how to sell, it's himself. To understand the current economic landscape, we must first examine President Trump's trade policies, particularly the tariffs imposed on major trading partners like China, Mexico, and Canada. These measures were intended to protect American industries but have led to significant repercussions. Soundbite of news anchor: the escalating trade war has sent shockwaves through global markets, with the S&P 500 nearing correction territory after a 10% decline. The uncertainty stemming from these trade tensions has dampened consumer confidence and business investment, raising concerns about a potential recession. Soundbite of economist: major banks have increased their recession risk assessments for 2025, reflecting growing unease about the economic outlook. Beyond trade, the administration's tax policies have also played a crucial role in shaping the economy. The Tax Cuts and Jobs Act of 2017 aimed to stimulate growth by reducing taxes for individuals and corporations. While it did lead to a short-term boost, it also contributed to widening income inequality and a ballooning federal deficit. Soundbite of financial analyst: despite promises to reduce the national debt, it increased by 39%, reaching $27.75 trillion by the end of Trump's term. The combination of increased spending and reduced revenue has strained the nation's fiscal health, limiting the government's ability to respond to future economic challenges. A soundbite of construction industry expert: tariffs on steel and aluminum have led to increased costs for builders, causing delays and cancellations of projects across the country. These higher costs have been passed on to consumers, contributing to inflationary pressures and reduced affordability in the housing market. Soundbite of market analyst: the ongoing trade war has led to significant market volatility, with investors grappling with uncertainty and adjusting their portfolios accordingly. Such instability can hinder long-term economic planning and growth, affecting everything from retirement savings to corporate investments. Soundbite of corporate executive: the unpredictability of trade policies has made it challenging for businesses to plan for the future, leading to postponed investments and hiring. This hesitation among businesses can slow economic momentum, reducing job creation and innovation. Soundbite of economist: the tariffs have acted as a tax on consumers, leading to higher prices and reduced purchasing power. As costs rise, consumers may cut back on spending, which can further slow economic growth.